The U.S. Federal Reserve has raised its key interest rate by 25 basis points. This brings the figure to the highest level in 22 years, but there's little information on the direction of the Fed's next move. Eun-jin has more.
On Wednesday, the U.S. Federal Reserve raised its key interest rates by 25 basis points, putting its lending rate in the 5.25% to 5.5% range. The borrowing rate in the U.S. has now reached its highest level since 2001. The rate hike comes after a rate freeze in the previous Federal Open Market Committee meeting, and despite consumer price increases slowing down. Consumer prices increased just 3% on year in June, marking the lowest annual inflation rate in more than 2 years. But assessing it to still be too high, the U.S. Fed is looking to bring the rate further down to its target of 2%. When asked if a further rate hike is possible at the next FOMC meeting slated for September, Fed Chairman Jerome Powell said such a move is not out of the question.
It is certainly possible that we would raise funds again at the September meeting if the data warranted. And I would also say it's possible that we would choose to hold steady at that meeting.
Powell acknowledged that the economy has proved to be surprisingly resilient despite the Fed's rapid rate hikes. Though inflation has reached its slowest pace in 2 years, the economy is still growing too fast for inflation to fall back to the Fed's 2% target, as consumer confidence is at its highest level in 2 years. Americans keep spending and businesses keep adding jobs. Powell added that it's too early to tell when the U.S. Central Bank can start cutting its rates, but also revealed that the Fed's staff economists no longer foresee a recession. Some economists think the Fed might decide to forego a rate increase in September before weighing a possible hike in November. Eun-jin, Arirang News.